With market-beating share price returns, a 26-year dividend growth history, and an expanding portfolio of properties proven to weather even the toughest economic storms, Realty Income truly is a work of art, and it is one of the most sought-after companies out there, which is why I consider it to be the Mona Lisa of dividend stocks. In this video, we're going to talk all about Realty Income and how great it is, but before we get to that, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks, and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, leave me a comment below and let me know, do you have any shares of Realty Income in your portfolio? I sure do. In fact, if we take a look at my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to it in the description of this video. But here we can see that I currently have over 37 shares of Realty Income at an average cost per share of $56.58, which means if we scroll over here, that my Realty Income position is up about 17%, and if we take dividends into account, I'm up about 27%. Now scrolling over here all the way to the right, we can see that every single year Realty Income is paying me $110.58, which if we break that down on a monthly basis, that's $9.21 every single month coming in from Realty Income, which is one of the things that investors love about this company. Realty Income pays a monthly dividend, and they take this dividend so seriously that they actually trademark their title as the Monthly Dividend Company. And regarding the dividend, there is so much more to love, in addition to the fact that you can get a reliable stream of cash flow every month. Looking at their dividend stats here on Seeking Alpha, Realty Income offers an above average dividend yield of about 4.5%. And if we look at the payout ratio, this will probably raise some red flags for you guys out there. 273.43%, which normally would be cause for great concern. But guys, this is the earnings payout ratio. And it's important to remember that Realty Income is a real estate investment trust. So what we really need to look at is the AFFO payout ratio, which stands for adjusted funds from operations. And this is what real estate investment trusts like Realty Income use to pay the dividend. Over here on the dividend safety page, looking at this metric, we see that Realty Income has an AFFO payout ratio of 76.18%, which really isn't too bad. This is right in line with the sector median of 73.19%. And now taking a look at the rest of the dividend stats, we see that they have a pretty low 5-year growth rate of 3.86%. But guys, across a longer period of time since 1994, Realty Income has a 4.4% dividend CAGR, and they've increased this dividend 117 times, leaving them with a dividend growth history of 26 straight years and giving them a dividend aristocrat status. And the fantastic thing is that despite numerous economic disasters in this time period, we had the great financial crisis about 15 years ago, and more recently the pandemic back in 2020, Realty Income's dividend didn't skip a beat. They just kept on growing that thing year after year, which I think in large part this consistency and reliability is made possible by their very diversified, extremely high quality roster of tenants, many of which themselves are non-discretionary by nature. I mean, just taking a look at how their portfolio is diversified by industry, many of these are going to be pretty non-cyclical, like grocery stores, convenience stores, dollar stores, and drug stores, which make up about 33% of their annualized rent, along with other industries like health and fitness and automotive services. And diving a bit deeper to look at their top 20 clients, we're going to see some very recognizable names like Dollar General, which are popping up everywhere. We've got Walgreens, 7-Eleven, Dollar Tree, FedEx, BJ's Wholesale Club, CVS, Lifetime, Walmart, for goodness sake, Home Depot, and Kroger, all of which you can be rest assured they'll be able to pay their rent, which contributes to Realty Income's ability to provide stable cash flow for shareholders that they've been able to grow year after year. But this growth isn't just specific to the dividend. In fact, it wouldn't be possible without being able to increase the rental revenue the company is bringing in every year, which if we take a look at the financials, this is exactly what's been going on with Realty Income. Looking at the revenue chart, this has been going straight up and to the right, at least for the last 10 years, and likely before that as well. And if we scroll down to the bottom, looking at that AFFO, the adjusted funds from operation, which remember is what Realty Income uses to pay the dividend, this is seeing a very similar trend. This is going straight up and to the right as well across the last 10 years and likely before that. And this strong performance in the financials has also resulted in market-beating share price returns. Looking at Realty Income's total returns compared to the three major indices, the S&P 500, the NASDAQ, and the Dow Jones Index, in the last year, they've seen a lesser drawdown than all three major indices. And zooming out across a longer period of time, looking at these last 5 years, Realty Income has outperformed the market here as well. And then once again, zooming way out, guys, going all the way back to 1994, look at the difference in returns there. Since 1994, the last, 28 years, Realty Income's generated a total return of nearly 5,000% compared to the S&P 500's near 800%, the NASDAQ's 1,500%, and the Dow Jones's 900% return. So if we put all of this together, guys, with Realty Income, we've got a company that's offering above average cash flow returns today that will likely continue growing into the future. Number two, we're seeing very strong financials that are backed by a very diverse and high quality portfolio of assets. And lastly, we've got share price returns that the rest of the market can't even come close to holding a candle to. With that said, it's no surprise that Realty Income is one of the most, if not the most, sought after dividend stocks out there. And on that note, when putting this video together, I was curious how many people actually own Realty Income in their portfolio, because it's always seemed to me like pretty much every dividend investor does, so I asked. From taking a community poll on YouTube, I learned that out of nearly 2,500 investors, 56% of them own Realty Income in their portfolio, which might not be the biggest sample size, but I'd be hard-pressed to think of any other stock where more than half of all investors had it in their portfolio. The only other ones I could think of that maybe would be on that level are like Apple, Microsoft, Procter & Gamble, Coca-Cola, or Pepsi, but to be fair, those are large-scale, internationally recognized companies, and outside of the investing community, I doubt anyone's even heard of Realty Income, which is an interesting thought because pretty much everyone is familiar with their tenants like Walmart and 7-Eleven and frequent them every day, but most people have no idea who owns the buildings except for us dividend investors. But anyway, moving on, the last thing we need to talk about regarding this company is the valuation. Is Realty Income at an attractive enough price point to buy today? And interestingly enough, Seeking Alpha gives them an overall valuation grade of an A-, but if we scroll down and take a look at the P to FFO, which is basically the real estate investment trust equivalent of a PE ratio, we can see that Realty Income's is sitting at 16.54, which is about 15.5% higher than the sector median P to FFO. So just based on this metric, Realty Income is trading at a higher premium than some other REITs like Kilroy Realty Corporation, Medical Properties Trust, and Simon Property Group, which all have much lower P to FFOs. And that's not to say you shouldn't buy Realty Income at its current share price of about $67 per share, because even doing so, you'd still be getting a 4.5% cash flow return, which is nice. But just know it is trading at a bit of a premium, but that's just because it's an extremely high quality company, and I still think it's worth considering for any dividend stock investor. However, if you're not a fan of Realty Income's price tag, then you might be into the 5 dividend stocks in this next video right over here. These 5 are all great companies that have really come down in share price and are currently sitting at 52-week lows. I think they're good ones to look at for any investor wanting to expand their portfolio, so check them out right here, and I'll see you in the next one.